Shares in wine companies and agriculture businesses have jumped on the stock market today in the wake of the negotiation to try and get China to ease those massive tariffs on barley farmers, potentially to the wine industry. Let's bring in our business editor, Ross Greenwood. And Ross, which companies have done best today?
Oh, look, it's a range of companies. And the strange thing is, in the agricultural sector, there's not as many companies as were once on the stock exchange. But we can go through a few of those affected. One of them, quite clearly, would be Australia's biggest wine company, Treasury Wine Estates. You can see here, its shares up by 4.75% as we speak. So it's a pretty decent jump in what has been a good day for the stock market anyway. Another one, Grain Corp, not necessarily big in the barley industry necessarily, but overall, anything to do with grain has sort of been affected by these things today. New Farmers, another one, up by more than 1%, and Elders there. Remember going back 2016-17, Australia in its peak years sent around 6.2 million tonnes of barley, which is largely used in the brewing industry, to China. Now, farmers in the meantime have had to divert to other crops. Some have planted wheat, others have found other markets for it, in particular as a source of stock feed. They've quite often used the barley for. But the government today came out and said around $900 million, they believe the 80% tariffs from China have really affected. And of course, with the wine industry, Kieran, it's going to have been much, much more again.
Ross, the Reserve Bank last week kept rates on hold. It appears consumer confidence went through the roof.
Through the roof. I likened it today as, you know, you bang your head against the wall enough. If you stop, it feels good. And this is pretty much what's happened. After 10 interest rate rises today, what you've seen is the consumer confidence has bounced back by 9.4%, according to the Westpac and Melbourne Institute Consumer Confidence Survey. This is it today. Little bounce at the end, but you can still see that consumer confidence is well below par. Par is around about 100. It's currently sitting around 85. And certainly the pickup in those people with mortgages was more than 12% today. So, you know, even things such as, you know, the intention of buying a big consumer item, that's jumped. And even though the overall sentiment is lower, the pickup is a really good sign, because if you consider, notwithstanding 10 interest rate rises, Australia's economy hasn't fallen apart. You haven't heard big stories of, you know, massive collapses out there. It's been a situation because people have had jobs, they've been able to cope with the rising cost of mortgages in particular, but other prices have gone up, especially energy prices in our economy.
Ross, finally, Milk Run, a local startup, it specialised in ultra-fast delivery, but it's going out of business. What's gone wrong there?
Okay, so in this particular case, the company started last year and raised $75 million. So you'd think it's a fair bit of money to burn through. But as we talk about, you know, companies and stresses that are out there, this is almost, if you like, a little example of what might be to come. A lot of these startups really have found it very, very difficult to excite investors to put additional cash in. So just last month, this particular company announced it was going to lay off 20% of its staff. But in the meantime, the business has decided that while it's got enough cash on hand to pay some redundancies out, to pay its suppliers out, it's going to effectively go broke. Its offer was that it would set up depots in Sydney and Melbourne very close to people's homes, and as a result be able to get your groceries to you at super speed. But the company has admitted today that the business model, they can't raise more capital they require, and as a result, the other option is to simply go out of business, and that's what they're doing.